Welcome to Momentum Monday. Today is July 28th, 2025. We are looking at the chart of the Nasdaq 100. We are at new all-time highs. Howard, does anything make you bearish here?
StockTwits, I don't know if you're logged into StockTwits. I think, again, I don't, sentiment only matters to me when the VIX, when there's panic. But let's look at some of the greed going on. If you go to the homepage, we added this cool feature. Yeah, if you go to sentiment next to trending there, and you can add the SPY price. There, just, yeah. So this is like, did you click on SPY price? All
Okay.
right. So here's what interests me. This is like very unique. Um, Signal, definitely not. Again, I generally use it more when we're in a panic than in a kind of a bull market. But you can see the S&P is rising, and we're getting this divergence, is that people are getting complacent, right? Like people are starting to get greedy. While not incredibly so, but when you see these divergences, doesn't mean the market's going to sell off. It's just meaning I'd rather play. You can play offense, and people are right now. But as someone who prefers to get in when there's panic, I'm back more in like being really careful and not buying my own bullshit here, right? This divergence and spread in the gap between the index and sentiment is starting to get wide. And then you've got so anyway, so that's just a little tip. That's now on the homepage of StockTwits, which is always worth checking for a minute when you're getting the heebie-jeebies about how people are behaving. So, Simon, you got two things. You've got incredible price action in like Nvidia, right? So let's go to Nvidia. This is the least fake company in the world, the biggest company in the world. It's up 80% since the VIX was at 60. We're 86, 62. If we flash back to where, forgetting the long-term chart, if we go back to the daily, go look at how you were. This is why you should journal. Go look at what you were thinking on April 4th. I know what I was doing. I was making fun of the tariffs, but I was putting out buys, right? Because that's what you do. And what was happening then? There was nothing but like it's over. DeepSeek is going to win. It's the number one app in the App Store. Again, I'm not an AI expert, but probably the best chance you had to buy Nvidia, right? So now all of a sudden people love it that it's doubled, and we know all this. We know what we know. So I'm not saying you sell it, but I'd rather be a seller into this type of euphoria and a buyer into fear. Now, again, this trend may just be getting started, and this could be on its way to being the biggest company of all time for many, many years, right? Because there are going to be a few humongous winners from compute. So the price action's fantastic on leadership, right? Go look at OpenAI. So you go look at Microsoft, which is the other, you know, I mean, again, like the time to buy was in March and April. Let's go look at Google, which is just getting its legs, just getting some respect back, right? So there's great price action. Then I go to the stupidity, like Bitminer with Tom Lee. Everybody loves Tom Lee, BMNR, not to knock the stupidity out there. But I don't know. Yeah. So this is what people are farting around with. SPAC that was an Ethereum, doing an Ethereum trust. Because Tom Lee is great at press and smart guy. And they just, of course, filed a shelf offering today. So supply is being created behind the scenes, right? So just as there's incredible companies doing well, there's just some incredibly silly, chasey, shining object behavior. And then let's go to fallen angels. These are companies that are trading at the lowest multiples in a long time. Let's pull up Lulu. Right? I'm not saying to buy it, but like at the same time, the market's just destroying companies that are tied to China or out of favor or too much competition. LVMH, like the luxury trend, like this is when you should probably be looking if you believe luxury is not dead. and this is an incredibly old brand. Let's go to the monthly. These were like the hottest stocks during the bear market of 21, 22, when tech was imploding. They're completely out of favor, right? So Nike's starting to get a little pin action, but also a
Yeah.
fallen angel. United Healthcare is like the biggest stock in the Dow. And it's gone from hero to zero. So there's some incredibly interesting price action in broken big names. There's a lot of chasing going on in
Are you
stock.
buying any of them?
I'm not a fallen angel type of guy. I'm more like when there's panic, I try and buy the best growth ideas. I'm definitely tempted on LVMH, but again, I'd prefer to see a bottom just because people are suckers and their margins are incredible. But again, I'd prefer to see like a catalyst for action. Is I'm definitely not, a buyer myself. I've got enough activity going on in the degenerate economy. So that's my overall take. Now,
Okay.
let's quickly go to some names that are working. All of these infrastructure AI plays are on fire. Today, after the bell, what was it? Celestica, CLS, Cadence Design, CDNS, Coherent, COHR,
Yeah.
Credo, CRDO. Like these names are, no one's following them.
Yeah. They just keep making new highs. Yeah.
Yeah. So you gotta, we went to this world, and I've been talking about it for like 5 years, where everything was trying to be squeezed down into we'll all own FANG, right? Like seven stocks, or we'll own the QQQ, nothing wrong with it. But, investing is more about leaning back, using your desktop, I think one big screen and really taking in what's working. It goes beyond just seven stocks. Especially now that the bull market is kind of broadening out, and getting comfortable. I don't think you can get comfortable ever with Trump, but like getting comfortable that like they can kind of try and predict how the market will react to this person. So I think there's complacency. So again, I think be careful with new ideas, but we're in a bull market. I mean, what's your take?
We're in a bull market, but also from seasonality point of view, we are entering the weakest part of the year, especially the second year after the elections. Like August and
Okay.
September historically have been weak, average down 4 or 5%. Like personally, I don't trade based on seasonality, but it's so far this year, the price action has been following seasonality very closely. And it's something that I'll keep in mind. And if you start seeing n- fewer good ideas, fewer new ideas, and ideas not working out, that maybe that's your sign that you either need to hedge or just to slow down and maybe raise some cash so you don't go through a bigger drawdown because a 5% pullback in the S&P, it's nothing in the big scheme of things for people that are invested in the indices. But if you own some of the momentum stocks and you're highly leveraged, that might mean 20%, 25% pullback
Yeah.
in those names. So this is something that I keep in mind because currently I'm not seeing, that many great setups. But then again, bull markets tend to correct through sector rotation, so I wouldn't be surprised if we see a pullback in some of the high momentum names, like Robinhood and Palantir, and maybe some rotation into some laggards, like more interest rate sensitive groups like home builders, mortgage originators, even though their prospects right now seem like the worst
Yeah.
economically, but sometimes the market is looking, 6 to 12 months ahead and thinking,
XHB and Meritage, like I talked about here for a few weeks, those have been MTH, those have been my like, okay, if I'm specking, I'll spec on home building. I don't love the setups, but
yeah.
I'm
Well,
just
from a purely
if
speculative
we
point of view,
turn, I just want to be in this and just early, and I'll add to this. If interest rates, yeah, I think. it's just it keeps my eye on this without truly speculating. Like they're not really moving. It's kind of like China. You're waiting for it to do something and it hasn't done it, and everybody's,
Yeah.
kind of watching it. Maybe a watch clock doesn't um doesn't move, right? It's just so many eyes.
Sometimes, but
There's
I don't think
so many
anybody's
new
anybody's
eyeballs on the
watching.
market. There's so many new eyeballs, and they're all coming in through this,
Yeah.
Coinbase and Robinhood, and so I think if you have a good idea and a thesis behind it, and you got to probe and kind of look, but there's no reason to plunge into interest rate sensitive stuff. Like there's just it's all blather right now. Rates are persistently high. Inflation is
Yeah.
creeping in, right?
Well, let me share, how I think about it. Right now, right now, if you go to YouTube, any of those other social medias, the most watched videos are videos about housing crisis and housing crash coming in. This is what people are talking about, and this is what people are watching.
Really.
So that
Okay.
sentiment kind of exists already. I don't know how much of it is priced, and but what we know is that they're not going to raise interest rates no matter what is going on, due to tariffs. And the government is going to basically massage the inflation number. So we're not going to see really a big spike in inflation just because they can calculate it, any way they want. Just like they're telling us that healthcare costs are actually down in the past 2, 3 years. And, I don't know a single person, whose healthcare expense has gone down. But, this is what the government is telling us. They can massage those numbers. So what I'm saying is that from interest points on the
Yeah,
side
but
of
your eyes and
interest
ears,
points.
Ivan, you have eyes and ears. You have a kid. And don't tell me that you don't think prices are going up.
Yes,
It's
that's true.
it's
What
never
I'm
been a better time to have loose change like I have. Don't get me wrong. I'm not looking at prices, but I can tell you, man, just because the prices are getting so outrageous that hotels like so outrageous on the edge that I don't know how kids aren't, and they're all on anxiety meds. I don't like the anxiety must be super high if you're in your 20s and 30s and just trying to get ahead.
No one is arguing against that. The prices, that's what I'm saying. The actual prices have gone up a lot more than what the official inflation numbers are showing.
Yes,
What I'm
yes.
saying that
Sorry,
we can
yes.
only see
Totally
a
agree.
positive surprise from Fed because we know that they're not going to raise. They might keep the rates, flat for the next couple meetings,
Yeah,
and probably they plan to cut at the end of the year. But the market also knows that there will be a new Fed chair
yeah,
coming up next year. And it doesn't matter what the inflation is. They want to cut rates. So they're going to start cutting rates. And obviously, this will impact some of those interest rate sensitive sectors. And the market being forward looking might try to speculate, you know what, we're going to push, home builders or some of the mortgage stocks, up 40, 50% ahead of that because the market often does that ahead of the event, ahead of the news. Um, and obviously, the other big factor that right now is impacting the market is tariffs, but the market doesn't seem to care. And on the
I think it's
com,
already, it cares. Go look at Deckers, go look at Lulu. I think if your company has multiple touch points around the world and you're making products that have to be shipped and like it's a complicated business. Deckers, they own hundreds of brands. This company, go look at the monthly. This is my tariff stock, right?
yeah, but
This
this
is
is
just
probably already priced in. Yeah.
this is a much tougher business to run. I'm friends with, obviously we're investors in Manscaped, and Paul told me, the CEO, that harder than the e-commerce crush of 21, 22, this last 4 or 5 months of Trump have been devastatingly hard to manage a company through if you rely on product from China.
Well, I
So
didn't know there was a e-commerce crash in 21, 22.
yes, there was. Go look at Shopify stock in 21, 22, right?
I mean, stock wise,
Well, that was
I
the whole
thought
industry. It wasn't just, it was
okay,
e-commerce, right? Like it's back on trend, right? Like e-commerce is growing.
but it went up like, a
I
thousand percent
understand.
before that. So
I
yeah,
understand, but Shopify hides the fact of what was happening to the long tail of their customer. Their long tail went out of business. Like 80% of Shopify stores were small mom and pop stores that just went out of business, right? As soon as the arb trade was gone. So what I'm saying is for those retailers that are even sophisticated at managing multiple product lines like Lulu, like LVMH, like Deckers, you can see how brutal Nike, you can see how brutal these tariffs are. And institutional money is, show me this is working, right? There's a big bet right now on a turnaround play in Nike finally. Um, okay, wait, so some of them are bottoming. This is a good sign. You know what I mean? But this could just be a bear market bounce.
Yeah,
So I don't know. I'm not
it
good
could
enough.
be.
I'm just not good enough to figure bottoms
I
out.
mean, tariffs definitely are impacting businesses. I know people that basically out of business
Sure.
because of tariffs, from the increase in tariffs because, they're unprofitable right now. What I'm
Yep.
saying is that the market has been reacting favorably anytime there is a trade deal. They talk about 30% tariffs on EU and in Japan. And then a week later they say, oh, you know what? Now they're 15%, the market, collapse and, and goes up. So the market has been looking for has been reacting favorably to almost any news
Yeah, I
lately.
mean, no doubt. But I mean, in the end, product needs to be shipped. And I look at Deckers and Lulu and I'm like, I know they're busy. I know these companies know what they're doing. And they're in incredibly nasty environment to own these kind of fashion companies or these clothing brands, even LVMH. Okay, so I think what we're both saying is the same thing. There's plenty of like bull market action going on under the surface. Three things can be true. It could be tough. You can have a bull market on some things, and there's froth going on at the same time, and so there's something for everyone. I think an outlier thing is what I call trickle down. They called it trickle down economics, but there's also trickle down degeneracy where the money's getting spent. It's just being spent on by one person taking 20 friends out, like the haves entertaining the have-nots. It can't carry the whole country, but there's a lot of that going on. Like, hey man, like, the Jeff Bezos of the world throwing parties for hundreds of people who wouldn't throw a party. You know what I mean? So money's getting circulated in the economy and this kind of trickle down entertainment and trickle down degeneracy. And I don't think it's sustainable. It's happening. So, but it's something that I'm watching.
Interesting.
Yep. So, but anyways, price action rules, we kind of covered that. Anything else, any other sectors stand out to you? I mean,
I
obviously
mean, right
AI.
now, I don't see that many great setups. Like the few that are looking decent, we have CSE working on a new base. Obviously, earnings are coming up, and
Yeah.
I would be surprised if it breaks out ahead of earnings. It's kind of range bound, but the 150 has been support. Another one has been Reddit, also getting tight and kind of setting up, curling up here. But earnings are in only 3 days, so
One that we both were in that was tight and had this set up and broke out was A Lab. We were both in
yeah,
that.
yeah,
I
big
sold
move,
a little bit, but like
30%, 40%
it
move.
was an
Yeah,
incredible, a lot
yeah.
of a lot of stocks look like this happened. So that, we kind of front ran that. One that I'm looking at that we talked about is Grab, which is kind of just teasing, but then not doing its
They
thing.
seem like a slower mover though, just because of that huge number of
Yeah,
shares in the float, like 4
yeah,
billion shares. Look at ALA, for example. They had only 160 million shares. So it's kind of easier to move
yeah.
smaller float um, stocks. Um, and what else is looking good? I mean, Rocket is very speculative. It had like a big move here. It's an interest rate play, and now it pulled back towards this 20-day. Here we see some rate contraction. I bought some of this today, just speculative, with a tight stop.
This other
Just
one, Unity, that you mentioned as a pullback, you,
yeah, super strong,
that's
broke
in a
out here.
pullback. I saw a bunch of people sharing it on
Yeah,
StockTwits.
yeah,
What do they, so it's monetize real time, it's gaming monetization. Let's go to the weekly here.
yeah. I mean, Roblox has been just unstoppable.
Right. So I think it's pulling more money into this sector. I was long Roblox through that run. They have that one game and platform, the gardening game. But if you go back to Unity, been a dog, but the price action's starting to turn. But I don't
Yeah.
have insights on the actual companies, but it was a disaster right from the IPO. But again, that looked interesting to me. Again, I'm sticking with you can't go in unless you got inside information on how this tariff plays out. I'm sticking to like pure play um, companies, not conglomerates. Um, Google being my only conglomerate, but I think they're a misunderstood AI story. And, um, Coursera was another interesting one. This is a company. So we're going to start seeing this. So I forgot to bring this up. I'm trying to get the CEO on Trends with Friends. So let's go look at this. So this is the next derivative of AI because StockTwits is working on this too, right? Perennial dog. It's a small company, right? But again, these they own all this content, right? These courses, right? And as college, and now AI works in their favor, right? It's hard for them to be disrupted because all the content sits in their database of classes and stuff, right? But now they can apply AI. So it's kind of a derivative next AI play from Spotify, Netflix were the first mover advantages on AI and Duolingo, obviously, because they have great business. Any subscription business that had its own content were the first movers in the AI play. Well, now you get into the second derivatives, right, which are unique smaller companies that have incredible content that's locked up, and AI could potentially unlock it. And so they surprised on their numbers. So this is interesting to me as a basis, because now you have some positive earnings momentum. And look at this. If they really are going to earn 45 cents next year after just being a perennial money loser, these are ones that you just have to just look for entries. And this is interesting to me. I've been in this before and kind of wasted my time, but AI is really so, this trickle down degeneracy is one thing, and then this trickle down AI effects, right? So company and Twitter played Elon played this beautifully with Twitter, right? Took it private and he's using, he had the ability to go build Grok on top of Twitter and build it as one company. So you can't play Twitter unless you want to
Mhm.
play it in the private market. So there's all these derivatives played. Look at Pinterest.
Yeah.
Again, I don't use the product and I never hear good things about AI in this because it gets supposedly women are complaining that there's AI slop all over Pinterest, right? Instead of people actually, it's all AI driven. But again, what a massive creative, they're not paying to make content at Pinterest. So, if it goes on an AI run, people will start looking at these. But again, because I'm not a Pinterest user, I'm not in it. But anyways, that's a lot of ideas we've thrown at people. So,
Yeah, I think that's enough. We'll just.
yep. All right, buddy.
All right, Howard. Thank you.
Have a good week, everybody.
You too.